Are you an investor or someone who's going to start investing? When it comes to money and investment, people usually fall into common pitfalls that even Warren Buffett himself has made throughout his whole career. In this video, you will learn 10 mistakes that every investor makes. We will review these mistakes and what Warren has to say about them. Welcome to EM3 Financial Freedom Strategies, where you learn how to manage your time and money to achieve financial freedom. If you want to know all the essential details that can help yourself up to date about finances, wealth, and investments, then try to watch until the very end. Mistake number 1. Looking through a narrow lens. Do you know that being too attached to a sector can ultimately be your mistake? Opportunities are to be had. If you look at only a single section of the sea, then you will definitely feel that there are fewer fishes than there are. As Warren Buffett once said, quote unquote, "We think the most logical fund is the one we have at Berkshire, where essentially we can do anything that makes sense and are not compelled to do anything that we don't think makes sense." I think it's a mistake to shrink the universe of possibilities. Ours is shrunk simply by size, but we don't set out to circumscribe our actions in any way. Mistake number 2. Being too attached to a purchase price. Suppose you miss that $1 you obsess so much, hoping that the price will go down $1. In the end, the price just continued to increase, and thus you missed your chance in the end. Warren Buffett remarked, "A stock at 50, somebody's paid 100. They feel terrible. Somebody else paid 10. They feel wonderful." All these feelings, and it has no impact whatsoever. People who are obsessed with price typically miss the bigger picture. The main focus here as an investor is the company itself. Will it be able to bounce back? Will it perform well in the future? If it does, then won't it matter if everyone profits anyway? Mistake number 3. Missing the big picture. Warren Buffett talked about missing the big picture. He said, quote unquote, "We've made plenty of mistakes in acquisitions. Plenty. But the mistakes are always about making an improper assessment of the economic conditions in the future of the industry of the company. They're not bad lease. They're not a specific labor contract. They're not a questionable patent. Those are not the things that count." According to Warren Buffett, it's much better to consider the management, the price, and the future of the business. You won't need to stress over every little aspect of a business as long as you bear these 3 aspects in mind. Mistake number 4. Making things more complex than they should be. Do you expect to make rad mathematical, statistical, and other technical related calculations and analyses just to make the right choice? Others do get ahead because others are not willing to do the extra work. But it's kind of different when it comes to investments. Warren Buffett said, quote unquote, "Some people think that if you jump over a 7-foot bar, that the ribbon they pin on you is going to be worth more money than if you step over a 1-foot bar. And it just isn't true in the investment world at all. Your chances to succeed are high if you can discover an enterprise with promising industrial and commercial potential, where the administration is sincere and diligent, and you don't spend excessively on that business." Mistake number 5. Staying your hand in the face of opportunity. Did you encounter a stock that you thought was pretty good but instead stayed your hand and kept waiting instead due to hesitation? Afterward, just because of that, you lost lots of potential profit. Well, Warren had that encounter. The biggest mistakes we've made by far are mistakes of omission and not commission. I mean, it's the things that I knew enough to do. They were within my circle of competence and I was sucking my thumb. I probably cost Berkshire at least $5 billion. For example, by sucking my thumb 20 years ago when Fannie Mae was having some troubles and we could have bought the whole company for practically nothing. When an opportunity within your circle of competence and with great potential presents itself, having missed it can be your greatest regret. Mistake number 6. Riding the bandwagon. Let's be real. Lots of people post online about easy money. This blew up during the pandemic, especially when crypto became very famous. Someone posted earning lots, enough for them to buy a house. Someone posted retiring early due to huge gains. The thing is, those people, if not lucky, are pretty much a needle a sack. They're just louder, which is why people think it's common. Warren once said, quote unquote, humans will continue to make the same mistakes that they have made in the past. They get fearful when other people are fearful. When they get greedy en masse too. That's where Charlie and I have an edge. We don't have an edge particularly in many other ways, but we are able, perhaps better than most, to not really get caught up with what other people are doing. Mistake number 7, timing the market. We look at individual businesses, but the stock market, I know of no one that has been successful at and really made a lot of money predicting the actions of the market itself. I know a lot of people who have done well picking businesses, and that's what we're hoping to do. Imagine a stock chart. There came a dip, another dip, and then finally a high. Due to this ongoing up and down, many became obsessed with buying the deepest dip, which is a mistake. The time for that dip might take months and years. Suppose Joe held his money just to buy that one deepest dip, not knowing that he lost more by wasting his time and not focusing on the important and knowable. Mistake number 8, trusting in realistic growth trends. Did you, even once, put your money into a company that promised 15% growth in just a year? Well, Warren Buffett has something to say. I think it's a mistake for any company to predict 15% a year growth, but plenty of them do. Very, very few large companies can compound their earnings at 15%. It isn't going to happen. Mistake number 9, being active at all times. Practice does matter in many different disciplines, but not investments. The more you spend time on it, the more mistakes you might commit. As Warren once said, if you feel you have to invest every day, you're going to make a lot of mistakes. It isn't that kind of business. You have to wait until you get that fat pitch. Just like fishing, it's better to haul a big net than to fish one by one. Spending your time will save money in the long run. Mistake number 10. Being too addicted to diversification. If you really know businesses, you probably shouldn't own more than 6 of them. I mean, if you can identify 6 wonderful businesses, that is all the diversification you need. Warren believes that it is better to focus on a few high-quality investments that you understand well and have confidence in, rather than spreading your money too thin across a large number of investments. By focusing on a smaller number of investments, you can better monitor their performance and make more informed decisions about when to buy and sell. That is all for this video. As always, me and EM3 wish you the best of luck. We hope you enjoyed watching this video, and don't forget to give a thumbs up if you liked it. Please subscribe if you haven't done so, especially if you're looking for tips, ideas, and other related information that can help you achieve financial freedom, stability, and independence. Thank you for watching, and see you in the next video.